What do you think is the most important thing when it comes to trading? Do you think it's account size, how much risk, how many trades you take? The simple answer is having non-subjective trades, or trades that are as close to non-subjective as possible. I've been trading currency markets since 2004, 2005. And it wasn't until 2 to 3 years ago when I made the biggest breakthroughs that I've made in my whole trading career. Those breakthroughs were understanding and having a strategy that runs in alignment with the algorithms. So I'm sure most of you know, but there's probably a few guys out there that still don't know, FX is run by algorithms. It is not a supply and demand situation. It is a purely manufactured market. What that means is it is set up to make you believe something in your mind and act accordingly on it, and instantly when you do that, it takes your stop out. In other words, the algorithms are lined up to set you up to fail. So that was always the biggest dilemma in my early days, as understanding that. So as I've moved forward from that, what I have now is coding developed that runs on MT4. So what that does is mark your trade setup on the chart for you automatically. You don't scour the charts looking for trade. All the guidelines and filters are factored in to run in alignment with what's going on. So I have tier 1 trades, what I call tier 1, and tier 2 trades. Tier 1 trades run on 20% subjectivity. Tier 2 trades run on 100% non-subjectivity. Yes, you heard me right, 100% non-subjective. When you get to that stage, you know you are the number one. There is nothing better than that. So I hear you say probably, oh, you only get 4 or 5 trades a year. No, I get in one pair, averages about 1 trade a week. The pound AUD, which I specialise in, we're up to 60 trades for this year. Success rate is the next thing I hear you say, oh yeah, you won't get much of a success rate with that. Success rate is plus 95%. Out of all this year in the pound Australian dollar, to this day, there is only 2 trades what give you an outright stop out. Only 2 out of 60. It can be done. I am doing it, and I'm proud to be able to put this out to the public, because we see all the mass educators are dictated to that they must only use 50-55% success rate strategies. And of course it suits their own benefit, because I'm sure all of you know now that the mass educators, like the L such and such taught me to trade and now I'm the biggest trader in the world. It doesn't happen. When you work through those guys, you have to work through their broker, and that means they get 50% of your losing trades, go straight back to them. So I've bypassed all that. I stand alone. I have no affiliations. I don't want any affiliations, and I am definitely not aligned with any brokers. You can use the broker for the levels that I trade on, and you can place your orders through any broker that you prefer. I have no input into that. So moving on from there, let's just come through and have a look at a couple of scenarios on the chart, and I'll show you what I'm looking at in the non-subjective trades. So with that, these trades, sometimes you have 24 hours, 48 hours also. So this ticks another box. Most of my clients are time poor. They work, have wages, have a job, managing something. With the non-subjective trades, these trades can be set as pending orders up to 2 days prior to the level that has been projected by their algorithms, where they are either going to turn or the market is going to continue on directionally from that specific level that has been thrown up, because I'm working in alignment with how their algorithms turn and twist the market. That's what it does. So the non-subjective trades tick everything that you can think of imaginably. A, of course, it's non-subjective. There's no one can do that. B, success rate is plus 95%. Trades, average of 1 trade a week. Time, look at the charts first thing in the morning, when you get home, when you go to bed. That's all you need to do. Now, when these levels are first highlighted on your chart, also the code sends an alert to your mobile and an alert to your screen. So the days of sitting watching charts is gone. Right? That is not for me. I did that for 4 or 5 years in the early days. And this is the beauty of this, and why I've persisted and persisted until I've had the breakthroughs that I've had in using this strategy. All right, so let's come through now and have a look on the charts and see what the setups look like. Okay, so this is just a shot of what your chart looks like with the tier 1 trades. Everything that you see on this chart is marked automatically on there for you, just to show you that. So let's just come through and have a look at the indicators. This is the input box to what I use. There's something like just over 2,000 lines of code to make that work. That's all the different settings I can play around with. This is a very sophisticated piece of equipment, but it makes using it oh so simple. So just to show that everything has not been drawn on there, the first thing we have is draw a winning PT3. Okay, so that PT3 is these triangles that are drawn on here. That's what that does. So let's just take that off of there and go to our settings up here and toggle it on, off, okay, and close, and now the triangles disappear. So everything that's on there is for your tier 1 trades. That's what's marked on your chart for you. Now when we come to the tier 2 trades, you'll see the same chart. Now there is only 2 setups left on there and there. So what the code does for the tier 2 trades, it removes any of the setups that weren't a directional winning trade, and so you've got a clean chart left with just those particular trades that we are working with. So let's come through now and have a look at some trades. Okay, so now we've just got the tier 2 trades. I've de-highlighted the formations. So all we're looking at is the triangle. So this is what we see marked, and this is the time frame we have. So this particular trade here, 8 o'clock bar, it filled on the 2100 bar, which is daylight in the morning. So you could have set that trade on as a pending order, and it reverses and goes up to target. So our target is what the value of our triangle is here, and it turns from that level there, and we are on here, and there is the accuracy of what we're dealing with. So that's trades completed. We've now got the next trade thrown up here, right, and it's thrown up on the 1330 bar, and that's on a Monday, Tuesday, right through here to Wednesday morning before it gets hit and taken out. You've got plenty of time there to take that trade. Again, here's our target distance, and there's our target level there, and it's taken out precisely. So with this, I'm working in very much in alignment with the algorithms. There's no two ways about it. That's what it does. So let's just come through and have a look at a couple more. Okay, so on this one here, here's our distance here, our level, which is 72 points. Take that up to the top there, to there, and there's our target level again. Precisely hits that, and bang, it goes back. Now the next one we've got here is one of the ones what I call it just continues on directional, meanders through, and it goes down. Our stop loss runs about this level here, and there it will be there, and under that we should get another section which comes in and takes that out and covers your loss on there and serves you very well. So that's why you get minimal losing trades. That's what's going on. So we'll have a look at one more, and this one here again, a 7 o'clock bar. It goes right through till 7 o'clock. That's 24 hours to there. And again, in the middle of the night, you're not watching it, you've got a pending order set, so you've gone to bed at here. 13:30 bar is the last bar I'll look at, which is here. Let it do its thing. It's filled during the night at that level here, and there we have our target taken out the next day in that big down move there. So again, as I say, when this triangle and the formation that gets marked on there is marked on your screen, it sends an alert to your phone, to your mobile phone, and it puts an alert on the screen. You know, the mobile phone is just magic how that works. To be able to do that, it just makes trading so easy. Okay, just a quick look at the results for the year so far for the pound Aussie. Okay, so if we have a look here, this is for January 21, January, February, March, April, May, June, July, August, September, October, November. There's the two outright losing trades. The green trades are the ones that reverse on that point. The blue trades are the ones that continue on, and they give you half a section profit, which is what that value is there. So that just shows the flow of trades through the year for the pound Aussie, how it works. I have a special FX calendar that comes with the course, and the weeks are labelled here: data week 1, week 2, week 3. So I always know where I am in the trading month. Right, very, very important. The reason it's important, if we just come across here and have a look where I've sorted these trades into their respective weeks for the year, and have a look here. Data week shows that the early times in the day there tend to be more directional. After that, till the close of trade, they tend to be reverse. They do what they're supposed to do. Week 1's probably about the best week of the month. Just got a couple here that do directional, the rest of them are all nicely done. Week 2, we've got about 50-50. And when we get to week 3, we've got the opposite effect. The early trades are the good ones, and the later trades are the ones that tend to go directional. So again, using spreadsheets and the level that I've taken it to, there's no one out there that can draft their trades up into week by week to give you a really, really good roadmap. So look, everything I do has a complete roadmap, and you must have that. If you haven't got that, you are in all sorts of trouble when it comes to FX trading. So guys, that's what it looks like on the chart. If I can help you in any way, look, if you are struggling with your trading in any way or just can't get the success you need, it's because you don't understand the algorithms, and you need to be trading with something like what I'm using now. I don't want to be a salesman, I'm just a straight down the line trader. I excel in being able to share with you and teach you the strategies that I have as well. You know, some guys are good traders, and of course we've got very good professional salesmen out there and professional script readers, we all know that. I pride myself on covering both ends of the field. The service I provide is a boutique service. It is a one-on-one in office for the 2 days. Now, I also do the online or home study courses. You can also do the course online and via a live link. I do that, and I'm also instigating just small 3-person courses that I will do in office, and they will be at a set time and day each month, and they will be a little bit more cost effective for you if you're in the local area or want to travel to do those courses. But look, the details are on my website. Have a look through that. My contact details are on the website. Have a browse through. Any questions, give me a call, send me an email, and I'm only too glad to have a chat to you. And yes, it's going to be me personally that talks to you. So when you make contact, it's going to be me. Emails are going to be me. The course in office is going to be me. The live links is going to be me. Right? As I say, it's a boutique service. So in saying that, I'm not going to claim that I've taught 200,000 people to trade. I see probably 25 clients a year who come to me. I am happy with that. I do not want any more than that. It interferes with my trading. I'm here to help you guys, the specific ones that actually find me out and realise that all the other advertising out there, the slick marketing YouTube campaigns that we see in the fancy classrooms and all that, we realise now that all that is a scam to relieve you of your money. Alright guys, take care, thanks for watching, and hope I can chat to you down the track.